Hey, what's going on, my friends? We're going to take another updated look at our $25 a week growth portfolio. Yes, my M1 Finance growth portfolio that we created back on October 8th with $100 behind ChargePoint, and then we added $600 behind six additional companies that are all inside of our portfolio. And so, how are things going? Because we are making money with this. But when you look at it over the past day, you can see we're actually down 3.94%. And the past week, we're down 8.68%. The past month, we're down 9.47%. This is a growth portfolio, my friends. It can definitely be volatile. However, when we look at the past quarter, in 1 year, all time, you can see we're actually up 20.67%. So if you're someone who's been part of this journey from day one, since we started this growth portfolio back on October 8th, you know it's been a heck of a ride. But nothing, that we've just seen and where we're currently at should be too surprising, again, if you've been following along. And I say that because the main company that really exploded, we bought in at the perfect time before it exploded, was BAKKT Holdings, which you can see they are still up 83.65%, almost twice as much as Nvidia. And so this beautiful burst that you see here, I mean, this initial burst was our additional $600 that we invested when we added the six other companies to our portfolio. But everything else here really was just BAKKT Holdings taking off on itself. Nvidia also had a nice run. You can see it's up 41.44%. And we'll look and see how everyone is doing. But I really wanted just to speak about BAKKT Holdings and how it kind of ran off. And how, I've been saying, if you've been following along, I was saying when it first rips that we could potentially take our profits, and that if you are on board, if you were someone who bought it prior to it running, to expect it to fall down a bit. And no surprise, it did exactly that. If we look at BAKKT Holdings and we say, okay, how has it done over the past 1 month? Let's look at 3 months first. So it hasn't been around for 3 months, but you just do 3 months. And you can see we literally bought it right before it ran up. And so when you go from $9 all the way up to $36, it's not always guaranteed that it's going to fall down, but there is a very good chance when something runs in such a short period of time that it's probably going to fall back down a little bit. Now, the question was, at what point will it stop falling? That's what we weren't too sure about. And that's the reason why with this portfolio and using M1 Finance, I like it because you're not tempted to do day trades as much or just swing trades. And this would be considered a swing trade. We see it run up, then we try to sell up here. And then as it falls back down, we buy back in. We don't want to really do that with this portfolio, with this account. We want to make sure we have everyone in here and we just stick with it. We just get them in here and we just start to contribute towards our stake of how much we own behind that company. It's not, you don't have to play any games. You don't have to be watching. You don't have to spend more time when it comes to investing in these companies. You just buy it when you buy it and let it do what it does. And ultimately, you want to just continue to contribute towards it, buying more and more every week or every month to, again, build up a larger pool of shares that you own. And so, I wasn't thinking it was going to fall down to back to where we are. So that's why I said, as long as we finish up, you pretty much are good. But it's still one of those things that it's kind of hard to see sometimes and accept when you're like, man, this was all the way up here at 36.60. I could have sold and then just bought back in when it fell back down. But like I've been saying in all the previous videos when I've spoken about this, you don't know at what point will it stop. It looked like at some point it was probably going to plateau up here in the 25s area, and then it just continued to go down more. Then at one point I thought it was going to stay at like 20, and then it fell to 19s and then as low as 17s. And now with the news of a new potential Rona scare and things like that, the market's red altogether. And that's why you've been seeing it, especially here with something like BAKKT that hasn't really proven itself and is still kind of iffy and definitely showing how volatile it can be. But that's part of the risk element when you invest in some of these growth companies and a company like BAKKT that hasn't been around for a year or 2 years or been really established, certainly is going to be very, very volatile. But the key thing to note here is that regardless, we are still up quite a bit. 83.65% is a lot. The challenge is, like I said, is when you know how much you are up, a week earlier or 2 weeks earlier, you're like, it's not really that much, because I was up like 150, I was up 300, I was up way higher. Like I said, you could have tried to sell it at the high point, but you don't know what is the high point, and you don't know what's the low point. So when you buy back in, you might buy back in over here, and meanwhile it continues to fall drastically. So anything that you would have pocketed, you pretty much just lost it because you sold, maybe over here, and then you bought back in over, or, it's just, you're trying to time it. And the big saying that a lot of people will throw at you is saying that you should just focus on the time in the market, not timing the market. And by time in the market, meaning the more time that you are invested, the better off you tend to be, instead of trying to time it and get the perfect timing to buy it. Because again, you might think it's stopping here and then it continues to go lower. So I did want to really just dive into that specifically, because I'm sure there are people who are new to investing that potentially may have kind of jumped on board with some of these companies and might be a little worried or freaking out and saying, okay, like, what do I do now? Because BAKKT Holdings has fallen so much. Do I sell it? And like I said, we're in this for the long haul, and we want to give, a company like BAKKT the opportunity to prove itself. And I believe, based off of what it's presented so far in terms of its goals and its objectives and what it's, what the company does itself, I believe in it, and I'm willing to put money behind it before it has fully proven itself. Because if you can get behind it now, the more you can get behind it now, when it does rip, if it does prove itself, it will take off, and the reward element will be much higher than it would be if we wait until it's kind of more sound and proven. So I hope that makes sense, and why I'm not freaking out, because this is a growth portfolio. We're in this for at least a few years. I mean, we want it to really be about like 10 years or longer. But, we'll say this is going to be a few years. Even a company like DraftKings, which I've said it before, I'll say it again, is kind of who I was most skeptical about adding to this portfolio. But I wanted to get someone that's kind of within that industry of gambling, and I am familiar with them. They are, but I'm pretty sure they're based. I can't entirely say if they're based out of Boston. I feel like they are. And yeah, I mean, just to confirm it, I wanted to make sure DraftKings is based out of Boston. So like I was saying, it is nice to support, a local business as well, since I am here in Boston. So, we're not too worried about this though, because again, it's a marathon, not a sprint. So diving in here, you can see BAKKT Holdings is still up, again, twice as much as the next company, which is Nvidia. BAKKT Holdings has a return of 83.65%. Then we have Nvidia, who's up 41.44%. Fantastic. Our EV Pie, which consists of ChargePoint, is up 37.34%. Great. And then we have Fuel Cell Energy, who's up 4.34%. Good. Now for the red. Again, the market has been very bloody over the past few days, and no surprises here that we would see another company or two inside the red zone. And to kick that zone off, being down, is Coinbase, which is negative 0.53%. Then we have Palantir, which is down 15.89%, and then DraftKings down 26.65%. As I mentioned a moment ago, not worried about any of these though, because it is something that we expect to be higher in 5 years from now, 10 years from now, 3 years from now. I'm not worried about any of these, and we wanted to see them continue to grow and get bigger and bigger. And yeah, I mean, I've said it before, I'll say it again. Investing with Webull, I think is a great long-term investment platform, and I'm a big fan of it. Especially if you upgrade to the M1 Plus account, because hey, if the market does tank after the morning market window closes, then you have the ability to continue to buy more that day or sell more. So if I wanted to play the swing trading game with BAKKT Holdings, when we saw it go up, 300% or whatever crazy amount, we knew it was going to fall down a bit. We could have sold at that point and caught the afternoon window to sell, and then we could just be sitting back on the sideline this whole time right now, just watching it to see when does it look like a good, price point to buy back in. We could have done that. But like I said, with this portfolio, we don't want to invest too much energy and time beyond pretty much what we've already done, which is the due diligence of researching who we decide to add in our portfolio. After that, I'm gonna have to jump in here and kind of follow the companies, see how they're doing, what news is there, what's going on with them when it comes to their quarterly reports and things like that. But beyond that, we don't really want to have to do much work with this portfolio. We don't want to have to try to follow it every day to time it to see when is the best time to buy back in. You can't make a buy order at a particular price point here in M1 Finance. So it really is a matter of, okay, are we buying it or holding it and running with it from there? If this was Webull, which is another one of my favorite investment brokerage, then you can do the whole timing thing. You can follow it along throughout the day. You can buy it at any point in time. If at 8 o'clock it drops to a certain point, you can buy it there, or you can just place that order, put it there, and say, hey, if it drops to $10, I want to buy it. So that's one of the benefits to Webull versus M1 Finance. And maybe I'll make a video diving into the difference of the platforms, more just to help you guys anyone who's new to investing and just really getting the ball rolling. But either way, like I said, we're just buying and holding really with this account for the most part. And so no timing involved. When we see companies dip like this, when they get into the red, we continue just to do what we were already doing, which is buying, more shares, fractional shares. And you have to look at this opportunity right now as a great buying opportunity, especially if you're someone who's just watching for the first time and you're like, you know what, I want to start my own growth portfolio. And I do like some of these companies in here. Or, if you're someone and you're looking and you're like, man, like Coinbase, I use Coinbase, but he's down on them. Well, hey, if you buy it when I'm down, that means you're getting in at a better price point than me. That means you'll have a better deal than me. That means you might be even and I'm still in a negative. So when this does run, because I believe all of these will run over the years to come, you're going to have even more of a profit than someone like myself who has a higher price average. So don't be discouraged if you're looking at this portfolio and you're like, I've heard about Palantir. Sounds like a good opportunity, but look how much he's down on them. This might be your buying opportunity, right? When I'm down, that might mean you want to get in then, because I'm not selling. If I'm not selling when I'm down, that means I probably believe in this company. I probably think it's going to be much higher than where it currently is. And I always suggest you guys do your own due diligence and research all of these companies yourself to see if it's someone you want to consider adding to your own portfolio. Oh, wait, you don't have your own portfolio yet? Don't worry, I got you guys covered. I got a link down below where you can start to invest similar to myself with creating your own portfolio here inside of M1 Finance. And, it doesn't have to be a growth portfolio. If you guys are familiar with my dividend portfolio that we release every week, you can see we're doing pretty well with that. We're also doing pretty well with that. And, so you can start a growth portfolio, a dividend portfolio, a mixture. But if you use my link down below to M1 Finance, you will get some free money when you start and fund your account with at least $100. So a great way to start to invest in yourself, invest in your future, invest in your retirement, or invest in some, sort of goal that you have that's down the road, a house, your first car, whatever it might be that's a little ways. This might be a great way to get you to have your money working for you, because we already know inflation is killing it when it's sitting inside of that savings account. So you want to get your money to start to work for you. I also have a link down below to M1 Finance. To Webull, which is my other favorite investment broker. And if you sign up with Webull right now, I believe they give you some free money, free fractional shares. I think you get like $5 of Shiba Inu right now. And depending on when you are watching this, it'll probably be some other potential stock that you might get, or it might even be money. So definitely consider signing up with them as well. I use both of them for different investing and trading needs. So I will have links to them down below. And while you're down there, feel free to smash that like button. I do appreciate you guys watching this video, and I hope you guys took some value from this, got some motivation out of it. If your portfolio has some red in it, don't be worried. If anything, maybe consider throwing more in your portfolio, to more money that will allow you to buy some of these great deals, because I don't think the market's crashing now, and I believe every company we have in our portfolio is going to be higher in years to come. And we're only going to say, man, I wish I bought more when it was cheaper, when it was $20, when it was $16, when it was whatever it might be. Today, well, I'm confident all of these companies are going to be higher in years to come, but I don't know for sure. So that's why we are doing a diversified portfolio. We do have a number of different companies in here, because if DraftKings continues to stay down, that's okay. We have other companies that are making up for it, compensating for it, which is allowing our average to continue to stay up pretty high, right? Pretty good. So my friends, if you haven't started to invest, consider doing so today. Get that money to work for you. We added this total of $775 to our portfolio here, and you can see we've made $121.76 in less than 2 months, just by having our money sit there. So if you had that same amount of money inside of a savings account, you will not see this much money, especially in this short of a time. So that is why we invest, getting your money to work for you. Only way you're really going to beat inflation, because that savings account, it ain't cutting it. But of course, you do need it. You need that emergency fund, and maybe a few other savings accounts, depending on how you manage your money. And I have a few videos here on this channel that help you with ideas on how you can manage your money as well, and how many savings accounts or checking accounts you should potentially have if you're just a regular person who has a 9-to-5 job, versus someone, maybe you have your side hustle, your own business. You probably want a lot more savings or checking accounts. And like I said, I got some videos on those things and other financial management content that will help you with managing, and growing your money. But all right, my friends, you already know I got to keep it moving, but I'll see you in the next video. Peace.